What if the biggest bank in America wasn't even American? What if the Federal Reserve, the institution sworn to protect your money, had been quietly printing trillions for foreign banks while telling you there was no inflation problem? This is the story of the hidden $8 trillion lie. It wasn't voted on. It wasn't debated. It wasn't even fully reported to Congress. But between 2008 and 2022, the Fed engineered a shadow bailout machine so large that it redefined what money means. You felt the aftershocks in every grocery bill, every rent increase, every dollar that buys a little less each month. Because when the Fed saved the system, it wasn't you it was saving. It was the system itself. Where are you watching from? Drop your city below. I want to see how far this truth travels. And if you're tired of the official stories, hit subscribe. This is Zero Reserve, and we don't do filtered finance. Because today, we follow the trail of the $8 trillion that escaped the headlines, and what it reveals about who really runs the world's money. To understand the lie, we need to go back to 2008, the meltdown that nearly broke the global financial system. Banks had loaded themselves with toxic mortgage-backed securities. When those imploded, credit froze, liquidity vanished, and panic spread. The public was told that the Federal Reserve stepped in with the Troubled Asset Relief Program, TARP, about $700 billion to rescue U.S. banks. That was the official story. But beneath that surface was a second rescue, invisible to taxpayers and larger than TARP by orders of magnitude. In the fog of the crisis, the Fed opened something called liquidity swap lines. These were credit pipelines to foreign central banks, Europe, Japan, the UK, and Switzerland, allowing them to borrow freshly created US dollars at near zero interest. Those foreign banks then lent to their own institutions to stop their systems from collapsing. Sound familiar? Because it happened again in 2020, and again in 2022. Every time markets shake, the Fed quietly reactivates this lifeline to the global elite of finance, with your purchasing power as collateral. The official narrative calls it maintaining liquidity. The truth: it's a global credit loop where the US dollar is lent, relent, and rehypothecated until money itself loses meaning. In 2011, after a court order forced the Fed to release its emergency lending data, the numbers were shocking. $16 trillion in secret loans had been issued during the 2008 crisis alone. Trillions went to Citigroup, Morgan Stanley, and yes, even foreign banks like Barclays and Deutsche Bank. Sound familiar? It should, because the same institutions that triggered the collapse were bailed out again a decade later when COVID-era panic hit. Today, they call it repo operations. Back then, they called it temporary liquidity support. Different labels, same game, an infinite money machine for the few. Meanwhile, ordinary Americans were told there was no money for student loan relief, no money for infrastructure, no money for healthcare. Sound familiar? The real magic trick wasn't just printing money, it was where they hid it. In the footnotes of Federal Reserve balance sheets lies a line item so innocent-sounding most people skip it. Central bank liquidity swaps. Those 5 words mask trillions in cross-border credit that never touch the U.S. budget. Here's how it works. The Fed creates dollars out of thin air, swaps them for foreign currency with another central bank, and agrees to reverse the swap later. On paper, it's temporary. In practice, these loans can roll over for years. They don't show up as U.S. debt, and they're barely disclosed. Between 2008 and 2022, these swap lines moved more than $8 trillion across borders, propping up foreign banks, hedge funds, and even corporate bond markets while the average American struggled to fill a tank of gas. Who authorized that? No one voted for it, no one approved it. It's a monetary coup by spreadsheet. And the man who oversaw its expansion? You won't believe the name. The receipt is wilder than you think. When Jerome Powell and the Federal Open Market Committee reactivated the swap lines in March 2020, they did it in hours, without congressional debate. In a single week, $450 billion was extended to foreign central banks. By April, $586 billion was out, more than the entire U.S. education budget. The official justification was to stabilize global dollar funding markets. Translation: Wall Street and European megabanks were panicking again. The swap lines let the Fed export liquidity, the most powerful weapon in modern finance, without accountability. It's like having a secret emergency printing press for your friends abroad. Economists call it lender of last resort. Critics call it financial colonialism, a system where whoever controls the spigot controls the world. The mechanism sounds technical, but the impact is real. Every time the Fed creates trillions to save the system, the value of existing dollars drops. Between 2008 and 2023, the M2 money supply ballooned by over 120%. Meanwhile, median wages barely rose 25%. That's not growth. That's a transfer of purchasing power from you to the asset holders who benefit from new liquidity. Here's the illusion. They tell you it's stimulus. In reality, it's a debt-based feedback loop. Every dollar created must be borrowed into existence, which means the system only survives by expanding its own debt. In 2008, the Fed's balance sheet was under $900 billion. By 2020, it passed $7 trillion. By 2022, it hit $8.9 trillion. No audit, no vote, no limit. And when they say, we're reducing the balance sheet, they're really just slowing the expansion, not reversing it. The swap lines became a permanent feature, an open global credit card for the world's biggest banks. They never fully closed after 2008. Instead, they were reauthorized indefinitely in 2020. The real scandal. Foreign institutions can access dollars before you can. Your local business waits weeks for a loan. A Swiss bank gets $50 billion overnight. And it's not just banks. Through repo operations and bond buying, the Fed absorbed corporate debt directly, even junk-rated bonds. In 2020 alone, Apple, Microsoft, and Amazon raised over $150 billion in new debt at record low rates thanks to Fed intervention. Meanwhile, small business closures hit 400,000. That's what the $8 trillion lie means, a hidden redistribution of wealth upward, packaged as stability. The moral hazard is staggering. When banks know the Fed will bail them out, risk doesn't disappear. It mutates. They gamble bigger, knowing losses can be socialized. The result is a shadow banking system worth over $200 trillion today, nearly double the size of the global GDP. It's a web of derivatives, off-balance sheet entities, and swap lines that no regulator fully understands. And when it cracks again, because it will, the rescue will be instant, invisible, and paid for by you through inflation. The $8 trillion lie isn't just about money creation. It's about deniability. Every time they inflate the balance sheet, they inflate narratives too. Temporary measures, emergency tools, liquidity support. Yet the crises never end because the system depends on crisis to justify itself. The real economy is no longer built on production. It's built on confidence in debt. When confidence wavers, they create more debt to sustain the illusion of growth. This is why the U.S. national debt climbed past $36 trillion by 2025, and interest payments alone neared $1 trillion per year. That's the compounding interest on the $8 trillion lie. So what does this all mean for you? It means that the dollar in your pocket is a claim on a system that no longer plays by its own rules. A system where accountability is optional and transparency is a threat. The next crisis won't be about housing or banks. It'll be about trust, because once people stop believing in the illusion of control, the game ends, and the digital dollar era is coming. Programmable money that can be printed, tracked, and restricted at the speed of code. If you thought $8 trillion was hidden before, wait until the balance sheet lives on a blockchain you can't audit. That's the final stage of the lie. A world where money isn't earned or saved, but issued by trust alone. So share this video before it gets buried. Comment your thoughts. Do you believe the Fed serves the people or the system? And subscribe for more deep dives like this one. Because what they hide in footnotes today becomes tomorrow's headline crisis. Are we wiser now, or just walking the same path in better suits?